What if I told you the most predictable crash in finance is happening right now? This is Kenya News Update today. Coming up, you'll discover the hidden 4-year cycle controlling Bitcoin's price and why a single Trump nomination could change everything for your crypto wallet. Bitcoin's short-lived bounce just faded. It's hovering around $67,000. But here's the twist. This isn't just another market dip. This is the ghost of a pattern written into Bitcoin's code over a decade ago, and it's playing out right on schedule. Meet Bitcoin, the world's first decentralized cryptocurrency. It was invented in 2008 by the mysterious Satoshi Nakamoto. For years, it's been a roller coaster of epic highs and crushing lows, but in October, it hit an all-time high above $126,000. The party was on. And then, the sell-off began. For 9 years, El Salvador even adopted it as legal tender. But now, the digital coin has been on a downward trajectory. It dropped below $70,000 on February 5th. It slid to hold just above $60,000, a key psychological level. It then recovered back above $70,000, but the bounce faded. On Wednesday morning, it was trading at around $66,975. That's around 47% lower than its record high. But here's what nobody's talking about. The February 5th crash wasn't random. It was triggered by a wave of liquidations. When traders are forced to close positions, it has a cascading effect that can exacerbate selling. Those liquidations have since slowed down. And then, something shocking happened. Selling from issuers of Bitcoin exchange-traded funds, or ETFs, which are large holders of the digital coin, led to outflows. That added immense pressure. However, in the last 3 days, Bitcoin ETFs have recorded net inflows, a glimmer of hope. But the real story is the cycle. Market participants are looking at whether Bitcoin's typical 4-year cycle is intact. This refers to the historical pattern after an event known as halving. The halving reduces the rewards given to Bitcoin miners and effectively slows down the supply. The supply squeeze typically precedes rallies to fresh record highs. The most recent halving took place in April 2024. There's been a debate, is the cycle over? Are the patterns breaking? But investors and analysts suggest the cycle is very much intact. This means we could be in the crash before new highs, but here's the part that will blow your mind. Investors are also considering a seismic shift in U.S. monetary policy. Why? Because U.S. President Donald Trump just nominated Kevin Warsh for Fed chair late last month. This single move by the Trump administration could change interest rates, which tech stocks and crypto assets move in tandem with. The implications are massive. If the historical cycle holds, this current volatility is just the painful prelude to another massive rally. But if it's broken, we could be in uncharted territory. The tension is clear. Some say trust the cycle. Others say this time is different. The controversy is whether your shillings are safer in Bitcoin or in your M-Pesa. But one unanswered question remains, if the halving cycle is so predictable, why is everyone so scared? We called back to the hook. Bitcoin at $67,000, down 47% from its peak, stuck in a range between $66,000 and $72,000. This is the 4-year cycle in action. Do you think Bitcoin will bounce back to a new all-time high, or is this crash different? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking business news that affects your pocket.